Good afternoon. Today is Monday, November 1st, 2010. This is Brian Shannon from alphatrends.net. Let's go ahead and take a look at these markets. We have obviously some big news this week. We've got elections on Tuesday. We've got Federal Reserve on Wednesday and a bunch of economic reports and earnings still coming out here. So it's a great time to kind of be going slow and looking for the reaction to to all this news and see how the market absorbs it. It's always the reaction that we're interested in, not our opinion of the headline that matters. This market, when we look objectively at the SPY, the S&P 500, we remain above the rising 10, 20, and 50-day moving average, higher highs and higher lows. So we have to look at it as innocent until proven guilty. We also can't forget or ignore the fact that this market has come pretty far, pretty fast from those, the lows of 105, and now we're into this big news event time frame. So it runs the risk of buy the rumors, sell the news, in particular with the elections. Now, that's a nice little saying, but until markets actually break down below it, we don't have any evidence of that. This market's really been holding on a closing basis. Every single close has been above the blue moving average. That's a 20-day moving average. And the 20-day moving average really is a very good indicator of intermediate term trend. When we look at this 130 minute time frame, we can see I've got that 5, 10, and 20-day moving average on there. And we came down and touched it a couple times or pretty close to it. And now here we are pretty much right on it once again. So that's currently at about 117.55. And I don't think that's a magic number that's going to crack this market lower. The definition of an uptrend isn't the day it breaks below a moving average it's violated. Instead, the definition of the uptrend is higher highs and higher lows. So until we break below one of these higher lows, and I think last week's low is the important area down near about 117.10, that area, if we break below that 117.15 on the SPY, that gives us a little bit of reason to think that we've got to become more defensive. We would be closing below the 20-day moving average, and perhaps that would lead to a little bit deeper pullback. This has just been a very nice steady uptrend that the biggest problem with it is that it's just so persistent that it raises suspicions that we need a deeper pullback. However, each time we've broken down below that 5-day moving average, we've kind of gone on defensive, and the market recovers quickly. But we've had 4 tests of that 5-day moving average. We've broken down through it, actually rather 4 times, and we're starting to turn a little bit more sideways. Now, markets can correct either sideways through time or by pulling back in price. This market has been kind of choppy here really over the last 2 to 3 weeks, but it is still making that pattern of higher highs and higher lows. You can't just look at today and say, well, it didn't make a higher high, but we look at it and say, as long as the higher lows continue to hold and we're above these rising moving averages, we give the benefit of the doubt to the buyers, and we look to longer term time frames to see where the potential is for this market to go if it continues to rally. Maybe we get a shakeout, a knee-jerk pullback, and then a rally up towards these highs from earlier this year. I still think those are something that we will likely test again this year at 122. Are we going to see a deeper pullback first? Well, let's just focus on what we can focus on, which is not the divergences and the volume and things like that. Those are good warnings, but if we remain above 117.10, let's just call it, then I think we still want to give the benefit of the doubt to the buyers, and we're going to see some volatility. Markets don't go straight up. We have some pullbacks, but you could make the argument that these gaps higher haven't been holding. Well, neither did this gap lower or this gap lower. So it's just more indecisive up in here, which means when the market tells you there's indecision, it means slow down, reduce your share size, reduce your expectations, and be ready to kind of move to the sidelines a little bit quicker than when we have more evidence of a stronger, more sustainable trend. Earnings have been good. There's still a lot to be reported this week, but there's a lot of good things that you could point to in this market, most particularly price, and there's a lot of things to worry about as well. But let's leave that to the the people who interpret headlines. We'll just stay focused on price. The NASDAQ is really come pretty far pretty fast. This has been just an incredible rally here. It's up beyond those 2008 highs, as we know, and that's down at 50 and a half. A pullback to 50 and a half wouldn't be a horrible thing. It would be close to 2 points from here, and it would get us down below that 20-day moving average as well. But a pullback to 50 and a half would probably be a very good thing for this market to kind of shake it a little bit, give it a chance to kind of clear some people out, get a lot more shorts comfortable in the market, and then from there be able to push it higher. But the NASDAQ continues to be strong. I would say probably a more important level in there would near term is about 51.50. But if that 51.50 cracks, then the bigger level is 50 and a half. So those are the levels in that market. Financials remain absolutely dead here. You could make a bullish or bearish argument. I think it's more prudent to look at this and say, with these moving averages crossing back and forth, it's more neutral. You could look at the 50-day moving average and say, well, it's rising, so it's bullish. Or you could look at the 200-day moving average and say it's declining, so it's bearish. More conflicting signals mean it's just neutral. Pretty much leave it alone until we have some kind of evidence of a bigger trend break. So that'll do it. Again, just I think with the elections, don't try to predict the outcome of or what it will mean to the market. Let the market tell you what what it's going to interpret, and the people with the bigger money, how they're going to respond to the market.